The Fed is stepping into the high yield space. The Bank of England and the ECB not there yet. Would you expect both those central banks to have to do what the Fed is doing if we continue to see this virus effect dragging on quarter after quarter?
Yes, absolutely. And while some may say it's a slippery slope and you can't be bailing out the over-leveraged companies or the companies that have poor ratings, it's not going to stop, because I think the Fed, to some extent, has really called into question. It's sort of called into question the concept around moral hazard. And while, again, I would commend their efforts, what they've done, because they've done it so swiftly, there's really no stopping point for them. And if things deteriorate, and again, if we go past this 2 to 3 month mark of where we're going to potentially extend into longer periods of quarantine or more economic suffering, higher unemployment, then they're going to have to continue down to move down to various different assets, and that's going to extend to other central banks. Right now, you've seen, like you mentioned, the Bank of England is on the sidelines as it pertains to high yield. The RBA of Australia has done really much aside from quantitative easing in the government space. So there's still a lot of work that these central banks can do. They're looking at the Fed as being the leader in this space. But again, I think we want to make sure to point out that when we're investing in corporate names, you can't just blindly buy credit. While it has performed well, there's other sectors that we want to avoid. And for us, we've sort of come up with the moniker that the beach, we want to stay away from the beach-related names, and that's your booking agencies, your energy names, your airlines, your cruise lines, your hotels and leisure. Identify good quality names that can last throughout this period and ultimately can come out the other side stronger entities.